So welcome to Bitcoin Advisors channel. My name is Chris Mitchell, and I'm making this video from popular demand around the office and just a lot of questions I've been getting from clients these days. Is the bottom in? What is your strategy? And everybody has a different strategy and different needs. So of course, this is not investment advice. I'm not a financial advisor. In fact, if you're investing in cryptocurrency, don't invest more than you can afford to lose completely. That's the great old saying here in cryptocurrency land. And so the question becomes, is the bottom in? Is the bottom in? Everybody wants to know, is the bottom in? And here's what I am looking at. First things first, what I look at before I make any kind of trades in cryptocurrency land is the NASDAQ, the S&P, the Dow, and the US dollar. Good old Dixie, right? And a lot of people are wondering, well, what is going on with Dixie? Why is Dixie going to the moon here? I mean, absolutely skyrocketing. And I'll just let you know something. So when the dollar goes up, risk assets go down. I'm talking about NASDAQ, I'm talking about Bitcoin, anything that is considered a risk asset. And as much as everybody wants to call Bitcoin digital gold, which I do think it is digital gold, right? It's just people don't know it yet. So right now, Bitcoin is still considered an extremely volatile asset. Expect 80 to 100% volatility in this asset. And that's why it's so important. When is a good time to buy? More importantly, when's the time to sell and move back to cash? And we have proprietary indicators that we follow that kind of give us a bias on whether to be bullish or bearish during a particular cycle. Now, as I mentioned, when the dollar goes up, Bitcoin goes down. And when the dollar goes up, NASDAQ goes down. And it's highly, highly correlated. And so here's a little target on the daily time frame for the US dollar coming up to, I believe, 112. This little green box here, I call it the green box of peace and prosperity or death and despair. And here's why I'm bullish on the US dollar. And for all you gold fans out there, I'm sorry. But when the dollar goes up, gold goes down as well. Gold is denominated by the dollar on the world market. So whenever the dollar goes down, gold goes up, vice versa. When the dollar is skyrocketing to the moon like it has, and this is a monthly chart right here, that's when you see gold go down. And gold did just break a key support level, yes. Which I'll show you that in just a second here. But what I want you to see here is the dollar is now the highest that it's been since 2022. So we just broke a 20-year high on the US dollar. And that's coming back to this wick right here. And we just broke it, in fact. And when you are in a breakout, well, let me tell you something. We're not in a blue sky breakout yet, in fact. We're pretty much there, but we're not quite there. So where are my targets? This is a macro breakout on the monthly time frame. We had this range between 2015 and 2020. And in fact, we broke it here in 2022. Right here was the break of the range. And that could clearly be identified by putting this pivot here and this pivot here. And that is essentially going to give us a range, and from the low to the high, I like to use the Fibonacci retracement tool. Look at that. We are beautifully coming into the 1618. We've had this called out since the break of this guy right here. As soon as we made a higher high coming in right here, we broke the range, and we're expecting the 1618. Now, in more volatile moves, and again, these moves typically take months. This move actually, in fact, took 1, 2, 3, 4, 5 months to hit that 1618 fib. The next target is a break above, any kind of a break above the 1618 typically leads above to the 2618. So as the dollar is going up, I'd expect risk assets like the NASDAQ and Bitcoin to go down. So the question is, where do those downside targets arrive? And the first thing I want to start it off is with the NASDAQ. For all you stock market buy the dipper bulls out there, here's why I think there is more pain to come. Well, from the NASDAQ, if you bought January 2019 in the NASDAQ, you are still up 89% in the last 3 years. From the low to the high, you're still up 89%. And Jerome Powell at the Jackson Hole Summit said this: we're going to have to inflict more pain in order to bring down inflation. What did he mean by that? Your 401k is going to have to become a 201k, so you stop spending so much money. Stop spending all that money. I'm just turning up the volume here. Hopefully the volume comes out nice here. How do you get people to stop spending money? You got to feel poor. When you feel poor, you're not going to spend as much money. The easiest way for the Fed to make people feel poor is to inflict pain in the market. So that's why the stock market, in my opinion, is going to come down much, much further. We've got the rate hike coming up next week. The Fed meeting, the FOMC meeting on the 21st and the 22nd of September. And I would watch out for specifically dates the 23rd and the 26th. That is Friday the 23rd, Monday the 26th. I imagine are going to be pretty bloody days in the market. Now, this is a macro view, and actually I'm going to put on the S&P 500 and point out a couple of very important dates and technical indicators. And again, green box of peace and prosperity or death and despair. Peace and prosperity means we bounce off this box and, make some new highs. At least get a bounce or a strong bounce off this box and then hold this level. This is the COVID low. This was the infamous COVID low, March of 2020. Okay, so why did I bring this chart up? And it is this. This is a 6-month bearish engulfing candle. That is a very, very bearish indicator. And I'm going to put all my indicators on and then take them off. Okay, so what did I want to point out here is this bearish candle has only happened 2 other times in history. Once was 1973, ahead of a 10-year bear market. We didn't make new all-time highs until 1980, and then the market then pulled a Paul Volcker. When you look at Paul Volcker, I don't know if you guys seen a picture of the guy, but he looks like a mafia guy. He looks like a boxer. He looks like he's sitting there holding a glass of scotch and having a cigar in his mouth, and he's ready to lay the hammer down. Jerome Powell, he looks like Joe Biden's cousin. He looks soft. He looks limp-wristed. Okay. Sorry, Mr. Powell. I'm just giving first impressions here. All right. 6-month bearish engulfing candle, 10-year bear market. And why do I say that? Well, it was January 1982 where the higher low was put in. You got the higher high, the higher low on the 6-month time frame, and then it was off to the moon again up to the year 2000. .com bubble started. Anyways, back into this 6-month bearish engulfing candle that resulted in a 10-year bear market. And what do you know? This was the only other time in history we had a 6-month bearish engulfing candle. Now, you can't deny this indicator. It already fired off in June. We've been talking about it with our clients since June, informing them that very, very likely this is going to result in a massive bear market. This was a 20-year bear market, noting that we didn't make new all-time highs from 1929 to 1954, July of 1954. So yeah, July was the breakout year. Anyways, why am I bringing this up? Well, we just had one of these 6-month bearish engulfing candles, and this is the COVID lows, and this is where the market was in January 2019. Why do I bring that up? January 2019 is this little guy right here. And if you do a measure move, again, on the S&P 500, not everybody's invested in the NASDAQ, but you're still up 56% from January 2019. Again, that's why nobody's really felt the pain in the markets yet. Interest rates are just beginning to rise to positive territory, probably by the end of this month. That is higher than the federal funds rate. I'm not going to bring that up right now, but all I can say is this: is my friend just bought a house, funded or closed it last month. He paid 6% for a 30-year fixed. When's the last time you heard of something like that? That sounds outrageous. I was like, wow, that sounds high. So if you don't think the real estate market's going to get hit, I suggest you wake up and smell the coffee, because, well, we got another 75 basis point rate hike. That means if you're getting a 30-year fixed going into October of this year, you are going to be paying probably closer to 7 or 8% to get that home. Okay. And just imagine if they continue another 75 basis points the following month, you'd be paying 8%. And the Taylor rule from the Federal Reserve says that interest rates have to be higher than inflation to fight inflation. Okay, so bearish things on the board. Now let me get on to, after we took a look at NASDAQ, Dow Jones, S&P. They're all doing the same thing, getting slaughtered. The dollar's rallying to the moon, and Bitcoin. What do we got for Bitcoin? I'm going to put this on the daily chart, which is a little bit more easy to read. In fact, actually, I'm going to show you why I think Bitcoin's going to bottom, or where the next bottom is going to be, and when it's going to be, and how exactly I'll be trading this market for our standard accounts, which is anybody under 250,000, and then our platinum accounts, which are $250,000 plus. And here's how I am developing my bias to be bullish or bearish. If you want to be bullish or bearish, right? So we got a weekly downtrend. When you have a weekly downtrend in Bitcoin land, typically you're going to see anywhere from 6 to 12 months of a bear market to 12 to 24 months of bear market. That means sideways and down. This happens to be September, the worst month in U.S. stock market history. In fact, I think it's 8 out of 11 of the last Septembers for Bitcoin have been negative months, where Bitcoin has gone down. So as long as the weekly downtrend is in place, I am looking for the market to continue to go down, down, down to doggy town. All right. What's the next thing I want to bring up here is this very unique pattern, which technical analysis is not all smoke and mirrors. It's about statistical probabilities, patterns that get recognized over time, and this one is quite undeniable. So I'm going to count it out for you. What we have here is, what we have here is 11 bars down and 9 bars up. So let's count them out here. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 bars down. Now we're going to have a 9 bar up. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So 20 weeks between tops. Let's see if this holds true for the next down, right? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Ooh, 11 bars down again. What do you know? And guess how many bars is between here and there? It's 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. Exactly. So as long as Bitcoin is maintaining the downtrend and holding below 25,000, this move in my book is in place in full force. And so what would I suspect the next bottom to be? Well, let's count 11 bars down. And it looks like I might have to move this over to there. There we go. So, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So I was correct. It was right there on the 24th. October 24th could be your next potential bottom, which is about a little bit of a month away. And how do we get ideas for where the bottom perhaps might go? Well, there's a couple ways, but let's just measure some of the last two moves down. Okay? From the high to the low, we're talking about 53% there. And while we're at it, let's measure the rally. 49% rally, okay? From the top to the next bottom right here, we're going to go, that's 63% down. So how much was the first one? 53% down. No, 51 to be exact. 51% down. Okay, and 63, excuse me. Call it 63, call it 62, whatever you want to call it. It's close enough. Close enough is close enough. And then what was the rally here? So that's 43%. So this one was 50%. That one was 43%. If we take an average between the two, again, 53 and 63%, let's say we go 55% down, just for kicks. Where would that put Bitcoin? 55% down would put Bitcoin at 11,500. 60% down puts Bitcoin at 10,000. And in fact, I'm going to draw this little blue box, green box, a peace and prosperity or death and despair. Again, peace and prosperity or death and despair. And it can be peace and prosperity for everybody who knows how to short and long the market and has an investment strategy that incorporates what's called risk management. I'll get into that in just a second. That's a pretty wide range, but hey, close enough is close enough. So I actually think 10.5 to 11.5. That's what we want to do. That's where we want to put this guy. And I'm going to get my little drawing tool here. I'm going to draw this out. So if you're a standard account, right? You have money at Kingdom Trust, our custodian, where you can either set up a Roth or traditional IRA. Standard accounts, depending upon your investment strategy. Again, some people just want to hodl and hold till they die. Some people like to move to cash and buy the next low. If you're one of those types of people who likes to take some risk off in these types of environments, well, this is one of the first targets that I'm looking at personally, again, this isn't financial advice. I'm not a financial advisor, but I do want to give you the most pertinent information. What else does this line up with that is eerily close in symmetry? Well, that is the 1618 Fibonacci retracement using this is a bearish retracement going from the market high, the market low to the market high. And where do typically bull traps come in? Right at the 0.5 or the 6.1, on a bearish retracement, it's a 0.5 or the 382. On a bullish retracement, it is the opposite. But needless to say, the 1618 is coming in right at 10,500. That is on spot price action. Now, I want to bring up one other indicator that has been very, very good to me. Very good. Very, very good. And here's what it is. Ladies and gentlemen, it is not this guy here. It is the volatility versus momentum indicator. And I wish I could say I'm the founder of this indicator, but no. Mr. Crown, kudos to you, sir. You are certainly the one who has mastered this, and I just nip at your coattails here, sir. So here's what I would say is that the average move, if you back test it, for volatility expansion, and I do it a bit different from Mr. Crown. I do it based on the BBWP. When it gets above 20%, that is when I indicate the move is in place. So if we measure the move from that angle, which this would have been a big fake out, which it was. Everybody got faked out on that move, and that's why you got to have a stop losses in place. So in effect, if you measure the average move down from when the signal is given, which would have been here, the momentum indicator catches the direction of the trade. The average move is 42% down. So where does that take you? From here, down 42%. Oh, look at that. That's at 11,500. So is everything lining up just well and nice? And that is certainly the case if you ask me. And this is how I be trading the market for our standard accounts, at least the people that want to essentially wait out the volatility and try to buy the dip. Because I do think in my book, there's going to be a nice bounce off of 10,000. It is a psychological number. It is also where some major past highs were printed. And coming back to these highs, coming back to those highs, this high. I mean, very, very likely we get a bounce for the very least in that region. And based on the past two moves, that was 53%, that was 63%. I think that we could certainly get something similar. Also to note, if we do close anywhere below, and again, this is where the bias buster really holds true. I'm going to try and make this video as short as possible because I know I'm getting long-winded here, but trying to teach you some of the basic ideas of, well, things you should be aware of in Bitcoin land. Now, and my mouse froze. Oh, she came back to life. Okay. So if we get any kind of a daily closure, if you're more aggressive, you might start shorting the market here. If you're a little more conservative, this will be the confirmation, the nail in the coffin. Any kind of a daily closure below 17,637, and I'm looking for that move to get initiated, which if you want to measure this, and this is how our platinum accounts are being traded right now. So I like to be as conservative as possible. again, platinum accounts are for people that are accredited investors, and they have 250,000 or more that they want to put to work for them in the crypto market. So some people like to be able to take advantage of the market as it goes down and then as it goes up. So how would I be playing this? Well, I'm looking for a minimum of a 34% drop to the downside, depending upon where the bottom is in. Now, if this pattern holds true, well, bottom right here, October 23rd, coming in hot. And if we use the weekly time frame, it's October 24th, excuse me. So somewhere around October 24th, and then what would I suspect, as Bitcoin hits 10,000, we probably get a 50% bounce over the next 9 weeks, and that would be somewhere right at the end of December. And since I just went through this with another fellow friend, I will just pop it in there, and it would be 9 weeks, December 26th, right around Christmas. And when is that typically around? Well, you ever heard about the Christmas rally, right? Everybody starts spending again to buy Christmas gifts and et cetera, et cetera. And as Bitcoin rallies 50% from 10,000, well, that probably puts Bitcoin back around 15,000 bucks. And that might be the next top, actually, around. So these predictions aren't giving an exact price. Can Bitcoin shoot through $10,000 and go to 4,000? Absolutely. And could we bounce higher than 50% and go to 16,000? Absolutely. And that's why these indicators do take a bit of experience and a nuanced interpretation, given all kinds of indicators besides just lines and buy here and sell here. You know, it's not that easy. But if you want to learn over time, we have a YouTube channel. You can follow along and start to learn the basics. And the first thing you need to do is set up TradingView. So not only can you track Bitcoin, Ethereum, all these other highly esteemed pieces of internet technology, right? They're not called bleep coins. They are called highly esteemed pieces of internet technology. They're going to bring the future to everybody at some point. And there are lots of opportunities in there. Bitcoin is the digital gold. Speaking of gold, as we said, I'm just going to throw this out here, because gold just broke a 24-month range. And if we use candle bodies on the daily time frame, more specifically, let's use the weekly. Why not? We just closed the week below, and I've been saying this all year long. Actually, as soon as we got this closure, I said, very likely this thing's going to come down further. The dollar is bullish, and in fact, these trend lines hold pretty nicely as well. So where's the target on my golds? Well, I'd say somewhere from this high to low. If you use Wix, I get a target around 1450. That's what I'm looking for gold to come down here. And that certainly might be a decent time to pick some up. If this area does break, the next level down is about $1,000 an ounce. And I do remember gold at $1,000 an ounce back. And everybody that thinks that gold is going to rally when the stock market crashes, let me just explain something to you, okay? And I've been a gold broker since way back here, okay? Been through the gold ups and the downs and the sideways and the downs and the downs and the downs. But this was gold in 2008. When the stock market crashed, here's March of 2008, gold was at, well, when did the crash start? Let's see how much from the top to the bottom. A 30% drop from wick to wick. I think it's about 35%. Give or take what exchange you were on. Yeah, 35% drop. In how many days? Call it about How many days was this? Okay, we're getting interesting here. Exactly 31 weeks. So call it 3 months. How many months is that? My brain's hurting. There are 5 weeks in a month, so 30 would be roughly 6 months. So as the stock market was crashing again, go back to Mr. S&P 500 during this time period, what happened? People use gold. Oh, what happened? March of 2008. So gold started selling off before, in fact. Here's March. No. January, February, March. March. My brain's getting a little bit tired here at the end of the day, but I wanted to bring you this video because I've had so many people ask me over the past couple of days, what are you looking at in the markets? What are your ideas? And I hope this is helpful for you. And I hope if you agree with this kind of style that you'll reach out to us, you'll call, you'll email, you'll text. We're happy to walk you through some of our ideas in more detail. So you're not sitting there getting baptized again. You know what I mean? What's baptism? Well, baptism by fire. You know what I'm talking about, right? This is baptism, when you lose 100 years on your life overnight. Just kidding. Everybody should get baptized. We love the Lord here. We love the Lord of Bitcoin Advisors. That's part of our motto, is love your customer as yourself. So hopefully that rings true for you. And yeah, so March of 2008, how many months? Just for kicks. That's 36 bars. So when the stock market crashed 43%, gold went down 35%. Why is that? People sell their most liquid asset to call their margins in the stock market. Okay. I think that's enough out of me for today, guys. I hope this video was helpful, and I hope that it can be of some value to you. If it was, please do go ahead and like and subscribe to the channel and share it with your friends. Signing out. Have a blessed and highly favored day. Take care.